Monochrome Bitcoin ETF provides investors with a regulated pathway into the cryptocurrency market.
When you're ready to take your investments to the next level, you might want to consider Monochrome.
Hello and welcome to the Global View on this Wednesday. I'm Andrew Gagan. Good to have you with us. Let's take a look at what happened overnight on Wall Street. Nvidia buoyed the market with the Nasdaq and S&P climbing, although the Dow fell, weighed down by the retailers. Nvidia rose sharply after a three-session sell-off, and the broader chip sector outperformed. FedEx shares jumped 15% in extended trade, reporting after the bell that its operating margin had improved to 8.5%, while forecasting fiscal 25 profit above analyst estimates, anticipating that the cost reductions planned this year would deliver further margin gains. FedEx shares are up 10% over the past 12 months, compared with rival UPS, which has dropped 20%. Home improvement retailer Home Depot was among the biggest decliners during the session, while Walmart shares also fell after it flagged second quarter as the most challenging quarter. And Spirit Aerosystems was also in focus, as well as shares in cruise operator Carnival rallying after raising its annual profit forecast for the second time this year. And shares in electric vehicle maker Rivian jumped 30% in after-hours trade after the German car maker Volkswagen said it will invest up to $5 billion in the company. Well, US consumer confidence has eased slightly this month. Meanwhile, Federal Reserve Governor Michelle Bowman has said that holding the policy rate steady for some time will likely be enough to bring inflation under control, but repeated her willingness to raise borrowing costs if needed, saying inflation in the US remains elevated, and I still see a number of upside inflation risks that affect my outlook. And in other US data, home prices increased 0.2% in April from the previous month. And taking a look at the Treasury yields, the US 2, little changed at 4.73, and the 10 is at 4.24. And in Canada, inflation reaccelerated in May to 0.6% month on month for an annual rate of 2.9%, with services inflation the key driver. The move higher follows a decision by the Bank of Canada to cut its benchmark interest rate by 1/4 percentage point earlier this month to 4.75%. And the US dollar has risen, while the Aussie is at 66.4 US cents. Well, as I mentioned there, Nvidia bouncing back after a heavy sell-off. So what's the outlook? And how do other memory chip makers stack up? Micron Technology has added around $60 billion in market value this year, as investors see the group's high bandwidth memory chips playing a key role in the AI investment surge. Let's get some further detail. John Blank joining us from Zacks Investment Research. John, very good to catch up with you. Thanks for joining us. So what did you make of that movement on Nvidia the past 2 or 3 sessions?
Andrew, I think it's classic technical stuff. We've got a Fibonacci sequence at this 115 level it hit and it bounced, and we also got a 20-day moving average that it hit and bounced. So, very classic pattern for a growth stock like this. And, underneath it, Andrew, is 15 analysts, all of which are upgrading first quarter, second quarter, next year, and this year earnings universally. So, just, very hard to get out in front of this freight train right now. So it looks up, Andrew. I would say it looks up.
All right. So that's the view for Nvidia. Continue to rise then. What then? And as I mentioned there, Micron Technology set to report third quarter financial results after the close on Wednesday. What are the expectations, John?
Yeah, here, Andrew, is a much more classic story, something I really want to get into with you today, which is, how does Nvidia play out as a substitute or a complement with other chip stocks, major chip stocks? This is the real story for the bull market right now, because if it's only Nvidia at 2.9 trillion in market cap, then maybe this is the end of the bull market for this stage for many months. However, if Micron reports tomorrow and they beat, and our system says they will beat and beat well, then you can see from this chart, they're going to be basically at fair value to their earnings. And then what you see here, though, is a really important thing, Andrew, that I wanted to point out to people. And you can see that back in 21 and 22, before when we were in COVID, memory chips like Micron were in demand. And this really was a hyperscaler driven, data center driven memory chip expansion. So in many ways, there's kind of a dance going on, I think, between Nvidia and these memory chips, particularly DRAM chips that are going to be put in place alongside Nvidia. So one of the stories I think you're going to get out of tomorrow, if we get a beat, is that there actually is broader representation than just Nvidia in the chip space. And that gets me more bullish. And again, Andrew, when I look at the fundamentals of this stock, the analyst coverage of this stock, it is universally bullish. So there's very, very little evidence at this point in time, at least, that people are getting, skeptical about the move in this stock.
What's your price target on Micron?
Well, we're at 160. I can see 200, Andrew, no problem. I mean, they say they can do $8 a share in earnings, so there's no reason not to think they can do $20, $25 in price earning multiples with Nvidia at their back. I mean, the real issue here, Andrew, is it a substitute or a complement? And memory chips are actually higher ranked as an industry than where Nvidia is. So I gotta believe, Andrew, just as an economist, this is a complement, which means it's gonna get those price increases from DRAM next year. It's going to make at least $8, and that's their conservative estimate, and they're going to keep on grinding those estimates higher. So that's what I like about Micron right now. And of course, Andrew, tomorrow afternoon we get a different story. Then this entire conversation will get updated.
Yeah, all right, okay. So all eyes on that result in 24 hours' time. John, I also mentioned there we did have FedEx reporting after the bell. Tends to be something of a bellwether for the US economy. What did you make of its result there?
Yeah, so you got to understand that the longtime CEO, founder of FedEx, stepped aside for a new CEO who was a lifer with FedEx, but a new guy. And he put in a very coherent multi-year cost-cutting plan to bring in all of the different divisions to FedEx in one place and to take out billions of cost. So basically, everybody was in a wait-and-see mode to see if this actually was going to work out. And for what they said, it basically is that it did work out and they did beat earnings. So FedEx, is coming together as one company for the first time with a new CEO. And that's really the bullish story here. UPS has had a lot more struggles than FedEx, and let's hope that FedEx really has sorted their business out here, because Amazon, all these different types of delivery services out there, they've got to stay competitive with them. There's no doubt about it.
So how do you balance that result then from FedEx and the outlook compared with what we're seeing for the major retailers there? As I mentioned there, Walmart flagging second quarter has been the most challenging quarter. What are you seeing in that space then, and what that is telling you about the US economy?
Well, Andrew, I mean, you got to think about food at home, food away from home, and real staple spending is kind of the where this pessimism lies, because people who are staying around on an actual income and going to stores, physical stores for their staples, are getting shocked still, and that is holding back consumer sentiment. However, we've got record home prices, record stock prices, and if it's discretionary money you're buying things with, it's looking good. So I think it's really the story here, Andrew. We got to get out to people is there's really kind of three drivers to the U.S. economy right now. And one is a headwind, which is, higher at home and away from home and staples prices for the income-based consumer. But outside of that, as we're learning with Royal Caribbean and Carnival and all these different cruise lines, people are stepping up. And we just had the record high, airport clearances this summer. So people are moving around, certainly the case for me. So what I'm seeing out here, Andrew, is labor shortages everywhere I go and lots of people. So it's really a case where discretionary spending is holding this economy up, and we're making that tailwind kind of reach over that headwind of the consumer staples issues.
John, thanks so much for joining us from Zacks Investment Research.
You bet, Andrew.
Quick check of where we're likely to get going, and the SPY futures they're indicating will be a lower opening, around about a 30% lower in fact. So stay with us. The open is just a minute away.